Good morning, everyone. Welcome to our Friday morning trading room. My apologies for opening the room so late. I was having a heck of a time launching GoToWebinar, and I still don't have my charts up, so please bear with me just a moment as I get my charts opened. Just get these to load and we'll be off and running. So the NASDAQ put in a crazy rally yesterday during the afternoon session. I don't know what's going on. Why the afternoon is so strong. That's certainly atypical. We don't see that kind of activity in the afternoon normally. All right, so I'll just load my trade manager and we'll be good to go. All right. So here is that rally that I was talking about. The morning was, well, we had a little bit of a rally out of the gate, but for the most part, this was the morning was boring. And then the afternoon, once they came back from their 3 martini lunches, the market just lit up. Not quite sure what the impetus was behind that, but you can see from where the market left off to where we're starting this morning, we have a little bit of a gap to the upside, and it looks as though they may try to get into that initially. The Falcon trendline color changing, the Hawk changing, the Raptor already with the trend change signal, that's the number 2 signal, right back into the hard edge. Okay, we'll see if we get a little bit of a bounce. This is all very early, mind you. The euro, dollar, and crude oil both heading a little lower. Okay, so here they're coming back with yet another number 2 signal, now on the Raptor. This after an attempt to move the market lower. And yesterday's trend was up, so I think it's reasonable to assume that we're going to see a little bit of an uptick here. We do have a chance for a second push entry opportunity on this signal. All right, we'll see whether or not we get any follow through from this now. Come on. So this number 2 signal probably didn't print because the test of the extreme was a little bit out of reach from here. If we adjusted the number 2 parameters, those are the SE parameters under your Raptor settings, we could probably get that signal to print. And thank goodness there was no slippage there either. Come on, almost to the break even, which is also the primary support zone. Come on. Now this is early, and normally we see bigger moves first thing out of the gate. There is the potential for this move to move a little bit further. Okay, so hit the first profit target. Hooray for us. Put that on the shelf now. So it looks like they may try to get in there and fill that gap, or at least part of that gap. All right, a little blow past, not much so far. I suppose we could look at, if you're following the Raptor, we're going to anticipate a cloud crossover here. So that means the market should retreat a little bit first. And if the new trend is going to continue, then they're going to bounce out of there. Big bulk of selling coming through. I'm going to assume that was pre-market because it doesn't look like that was enough of a response given that much selling. So it looks like taking profit on target might have been the way to go. Mark, nicely done. Great way to start the day. Mark says, took 4 contracts on that first micro macro cross out of the open. That would be this bad boy right here. Easily hitting his profit target, 375 in the account. Well done, Mark. Yeah, it seems like the market making a little bit of a move early and then just kind of, I don't know, falling flat. Yeah, Steven says, I know it worked, but I didn't see that first trade as a high probability momentum trade. All right, well, we'll review. I'm not sure if you meant mine or Mark's, but we'll review both. So we'll look at Mark's trade, which is the first micro macro cross signal. The first micro macro cross signal occurs when it's that first signal on your hawk where everything is in sync. Your micro lines, macro lines cross, everything comes into sync. Your bar colors are the same. Your signal is the same. The filter is the same. You could interpret this one as your first micro macro cross or this one. Because on your warning dot bar, the macro line was still out of sync on that one. But regardless, it's a high probability signal. It works out the vast majority of the time, and part of the reason for that is we tend to have a tighter profit objective. Now, I know Mark must have ran his out a little bit further, and it looks like he took that first one. But you can see it doesn't normally require too much out of the market to at least hit the high probability target. And that first signal that comes in sync, the reason you get that initial follow through is because the market is showing you that, okay, everything is in sync, we're going to try to go this way now. So we have one here. Oh, that was pre-market, but it doesn't matter. It's still a first micro macro cross. We have one here. We have one here. And you can see in each instance, at the very least, you're going to be able to find your high probability target. Here's one that gave you some heat. You know, it moved against you a little bit, but it eventually trickled down to your target. It may have been a little bit difficult to manage, but it did get you there. Here's one here. So it's a signal that when it prints, you can take it with a great deal of confidence. That first signal where everything is in sync after the micro and macro lines cross over, or where everything goes out of sync and comes back into sync even though it's mid-trend. See, here the lines are not crossing, everything is out of sync, comes back into sync. This would be also considered a first micro-macro cross, as would this. Obviously, as you know, in trading, you're always making decisions in a fog, right? You're never going to have all the pieces to the puzzle. You're always taking a trade, and the outcome is uncertain. That's why trading is as difficult as it is. To protect ourselves against that uncertainty, we use the risk component of the trade manager to contain our risk exposure. So trade manager is telling me, okay, Eric, you can afford to lose $400. That's 2% of my capital. Do I want to lose $400? No, of course not. $400 is a lot of money. I certainly don't want to lose that. But trade manager says, okay, this is your max that you can afford to lose. If I'm uncomfortable with that amount, I need to change this value here, not bring the stops in closer. You see, the risk amount really doesn't change. Now, to its credit, the DTS and Raptor systems normally only print signals when the market momentum is there. Right? You can see in most of these signals that printed, there was very little pushback against the signal. The market just continued lower. However, there will be times, and I think there was one over here somewhere, where we got the signal. Oh yes, this one right here, where we got the signal and the market actually did push back some. So my logic is, if I'm going to have $400 at risk on a trade, I don't want to put my stops right there. If it's going to cost me $400 to be wrong anyway, why not give the trade a chance? And that's why I tend to place my initial stops a little bit further away. And if the market does retreat against my position somewhere along the way, I will get an opportunity to tighten my stops. At least one opportunity. And depending how anxious I am about the trade, I can maybe bring my stops in a little faster or whatever. But I tend to try to be a little bit more patient. So let's say I even brought my stops down here on this one. The market reverses, stops me out. I make a note in my journal that, hey, Eric, you were a little bit too fast with your stops. But even here, even though my initial risk was $400, I get stopped. It looks like it's going to be, I don't know, maybe $100. Well, if $400 is 2% of my capital, $100 is only 0.5% of my capital. Those kinds of losses, although still unpleasant, are not the kind of losses that are going to cripple your trading account. So I guess what I'm getting at is there's always an element of uncertainty, that leap of faith that you have to take. The only way you're going to get comfortable with that type of signal is not by throwing more indicators on your chart. You know, somebody told you, hey, CCI is really great, let's put CCI on our chart, or Bollinger Bands, or whatever. No, that's not going to help you, because you can put a dozen indicators on your chart. They are still going to be reactive, not predictive. The only way you're ever going to get comfortable with the signal is actually, just to grab your cursor, move your chart back, and start following your first micro macro crosses and calculating, like, would that signal have hit my profit objective? So that's the first micro macro cross right there. It's very late. Would that have hit my profit target? No, it came up short. But if I were running a break-even trigger, you could say, okay, well, I can see the value of running a break-even because it would have taken me out at break-even. By doing this, you're going to find that the vast majority of first micro macro cross signals actually work out and are profitable. And I can tell you all day long how good the signal is, but until you go through it yourself and you make notes about how the signal worked out, you're always going to be trading kind of with that knot in your stomach, that feeling of uncertainty, that you just don't trust the signal. And I'm telling you, the only way through that is to actually do this exercise. Take 20 minutes, roll through your chart. It won't take you more than that. And just highlight your first micro macro crosses and count them. See how many were winners, see how many were losers. Tally it up, convince yourself. Mark says he had 2 profit objectives, so he has I guess like a scalp target and then maybe a swing target on his trade. But at any rate, the reason Mark is making money doing those is he has the confidence. He's done the legwork. He's proven to himself that the signal actually works, so when he gets the signal, he takes the signal. Do they all work out? No. Do the vast majority work out? Yes. And like I said, I can be on my soapbox all day long and try to convince you, but until you do it for yourself, you will not be convinced. Why did my thinking why did my signal work out here? Why did my counter trend signal work? Because if you're looking at the overnight obviously in a downtrend. Okay, there were 2 things that I was considering, and bear with me a moment while I build a NASDAQ chart. I should just leave a NASDAQ chart up. I need to reference one all the time. Okay. So here is the daily NASDAQ. What is the trend of the NASDAQ? And if you're not sure, and there happens to be an 8-year-old nearby, ask them. They will probably tell you it is up. Knowing that the overall trend is up, it makes more sense to buy than it does to sell. Even on these days where the market is moving down, there are still bullish rallies. You see, at one time during the course of the day, the market traded up here. Yes, it closed down here, but there was a rally. The rally may have been early. It may have opened and rallied up and then fell down, or it may have opened, came down, rallied up, then fell down. We don't know. But somewhere through the course of this day, there was a bullish rally. So even if I was looking at this chart and I said, oh, okay, I'm going to have a little bit more of a bullish bias and just concentrate on the buy side of the equation, I'll probably still be profitable. I probably would not be as profitable had I been a seller on this day. But even if my overall bias, if I looked at these bars right here, when they printed, and I thought, oh, market's got a little bit of a bullish slant to it. I'm gonna stay on the buy side. Then you get a buy signal, and it's also a test of the extreme. It's a little bit of a drawn out test of the extreme, but it is a test of the extreme. And we have a downtrend preceding, or I should mention an overnight downtrend. The market has a tendency to reverse an overnight trend, if there is one. Not always, but often. So if you open up your chart pre-market and you see that there's some sort of pre-market trend, it's almost certain the market will try to reverse that fairly early in the day. So when I see a test of the extreme, and I know that the overall bias is bullish, and I see an overnight downtrend that might reverse, I'm going to take a chance and I'm going to try to buy it up. Again, the risk component is we deal with the uncertainty by controlling our risk here, not by placing our stops here and hoping the market doesn't make even the slightest hiccup. In this case, again, you can see it would have worked out, but almost not. Market almost looked back and would have tagged you out, only to reverse and head higher. So there's the logic behind those trades. If I remember right, Mark can quote the opening segment to "Enemy at the Gates" because Mark makes references to being a sniper. If you haven't seen the movie with Jude Law, it's a good movie. I guess it's probably about 15, 20 years old now. Pull it up on Netflix. Watch at least that opening segment, because what his grandfather teaches him about hunting is the same mentality you need to have as a trader. You can all even see it on YouTube, I'm sure. But Mark writes, I only focus on a couple of signals, the first micro-macro cross in the hawk, and the late filter entries and trend change signals in the falcon. And of course my own divergence signals. Few is more to me, and having the mentality of a sniper patiently waiting for those setups, it took a lot of practice and screen time though to get there, and I'm still and probably always will be learning. So, again, Mark's done like he says, the screen time to convince himself that, yes, these signals are reliable and they are signals that I should try to take. And as I mentioned before, I can sit here all morning long and tell you how great the signals are, but you won't believe me until you do it for yourself. All right, well, now we're kind of floundering a little bit. Not as much follow through on the buy side as I anticipated. We're deep enough into that gap that we can probably consider that gap to be filled. And I would actually entertain a short. Let's see, did this number one signal hit its profit target? Oh, it did too. Okay, excuse me just for a moment, folks. I'm going to be right back. Okay, I'm back. Picked up a little splinter in my hand yesterday, and I couldn't get it out yesterday, but I could see it this morning, so I had to get it out of there. It was driving me bonkers. Well, I don't know. Looking at this, we're here at the high of the morning, low of the morning, very, very tight range today. Hey, Scott. Scott says, how did you measure the range or measure the profit on the number one in the NASDAQ? The Raptor high probability profit objective is $100 per contract. So the NASDAQ being a $5 instrument, that means there would be a 20 tick target. So all I did was set up my trade, and that's where my profit objective would have been. I don't know, maybe I was a little too quick suggesting the market is going to head lower. All right, I'm not entirely sure about your question here, Scott. Scott's asking, so all number ones are 1 point even if it shows trend. The number one signal is your cloud crossover signal. It occurs after your clouds cross and there's a little pullback. Sometimes the pullback is big, but there's something resembling a pullback, and then the market trying to push prices lower. All right, so that's your number one signal. Typically, the number one signal, or the more reliable number one signals, will occur shortly after the cloud crosses. You see how this one, how quickly the market came down, even though that printed a number one signal, even though technically it is a cloud crossover signal. Once the band starts to get really extended like that, you've probably already blown past the signal. It's not to say this signal will not work out, but look at the amount of heat you've had to take so far against the position. So here too, you know, it's the kind of signal, if I'm going to take it, where do I place my stop loss? Right, there's not a lot of structure. The closest structure is right here. That swing right there at around the 60, 62, and that's going to be out of reach. There's no real crest. I suppose you could try the hard edge. Even that one's out of reach for me. But you can see the market eventually traded through the hard edge and actually came up here and challenged the 60-62 area. But yes, a number one signal will, it's essentially a trend change signal. You can think of it that way as well. If cloud crossover is confusing to you, consider it a trend change signal. It will develop as the market attempts to establish a new trend. Boy, we're just grinding here this morning. All right, Scott says, so on the most recent number one on the NASDAQ, it crossed the cloud, but I will target only a $100 profit from a $50 contract. All right, I'm not entirely sure what you mean by a $50 contract. I hope you're not suggesting that you just run a $50 stop. that could be a little bit cozy. You may find your $50 stops getting tagged a little prematurely. A good friend of mine, Tom Loge, hates to give up anything to the market, and he will have a tendency to run a $20 or $30 or $50 stop, but he's prepared to get stopped out 6, 7, 10 times in a day. I've always said to him, Tom, instead of getting stopped out all those times and owing all that commission and all those exchange fees, why don't you just run a $200 stop? You're going to lose $200 anyways. Why don't you just run a $200 stop? But for the way he's wired, that makes no sense to him. I guess he gets a real thrill out of picking a signal and then, you know, having minimal amount at risk and actually seeing the trade hit its profit target. He gets a real charge out of that. That's about the only thing I can suggest. Risk-reward ratios only work on paper. Okay. Scott says, no, sorry. All target question here. If I trade one contract, I set profit to $100. That's the high probability objective, yes. Now, occasionally people in the room will expand or contract their profit objectives. It's a inverse scale. So the tighter your profit target, the more winning trades you'll have. The bigger your profit target, the fewer winning trades you'll have. But of course, the profit offsets as well, right? You may win more often, but you're earning less per trade, or you earn more per trade, but overall your trades are less profitable. Both ways work. One of my most profitable months ever, I was only right 40% of the time. I was wrong 60% of the time. And again, if you don't journal your trades, you're never going to be able to make that relationship. But the market was a little brisker. There was more follow through on the signals. I was quick to take my losses, so I never, took a real big loss, and all those things helped. I've always liked taking profit. That's always suited my mentality. I don't have an issue if the market goes on without me, but I do know traders who do. I know traders who get very upset if they exit a trade too early. And there are some traders who will tell you that if you're a small trader, you're always going to be better off swinging for the fences, trying to capture that bigger move. So just as a for instance, okay, here's now the 5-minute NASDAQ chart. And, we're trading in hindsight, so you gotta appreciate this is easier to do after the fact. But let's say you looked at this chart and you said, ooh, big gap up. Okay, I'm going to be bullish on the day. The market reverses. I buy here. So you buy on this bar, and your initial stop is not here. Your correct stop is actually down there. That's your correct stop, believe it or not. So you're trying to manage this as a swing trade. You don't know at this point whether the market's going to continue higher or not, but typically if you're going to manage it as a swing, you're going to try to give yourself every opportunity to hang in as long as possible. You only roll your stops when you breach swing points. So the market breaches the swing point here. Your stop finally comes from here up to here. So you bought here. Now, after about almost an hour's trading or half hour's trading, you're finally in profit. You're finally out of your risk and you finally have profit. The market goes higher, higher, higher. It's not until it gets through here that you can roll your stop again. And now you roll it below the last swing point. The market breaches up here and you roll your stop and you go into the close, you would take your profit. So this just a real good example of how good it can be if you happen to catch a trade that is rallying. The day before, not nearly as forgiving, is it? So let's say, no, I don't know, the market opens, you have more of a bearish slant. You think, oh, big bar down, okay, here's a retracement, I'm going to short. So you end up shorting here. And your initial stop is not here. Your initial stop is actually up here. That's the correct place for your stop. As you can see, the market comes down. You may have interpreted this as a swing, in which case the market trades through, so now you can bring your stop down to here. So you're in from here. Now you can bring your stop down to here. That's best case scenario, by the way. Then the market reverses and stops you out. So you say, ooh, okay, big rally up. I'm on the wrong side of the market, so I'm going to look to buy. And you get long here. Your initial stop is not here. Your correct stop is down here. Believe it or not. So the market rallies, trades through. You can finally bring your stop up underneath here. And the market does a little bit of a hiccup here, so you can bring your stop up here. But you can see for all your effort, that's your profit, that little bit there as the market reverses on you. If you had tried to short it again, you probably would have ended up with, well, maybe a break-even trade, maybe even a little bit of a loss. So swinging for the fences, great strategy. If you happen to catch a trending market, you can make a lot of money. But when the market is not so cooperative, it's going to be tough slogging. You may walk away with a profit, but you're also going to absorb a couple of losing trades, right? Possibly a losing trade there. And like I said, if you tried to short, you may have had a small loss. Let's say you saw this, okay, so you got short somewhere through here. Initial stop, again, up here. That's the correct stop. The market never trades low enough for you to really adjust your stop, so you probably get out near the close and you absorb a smallish loss. So on this day, these two would offset each other, your profit and your loss. You walk away with a little bit of a loss on that day. Now, again, it's not a crippling loss, but it is a loss. The day before that would have been the same kind of mess. Would have been really difficult to walk out of this day with a profit if you're trying to swing for the fences. This trade here, again, a tough day. To try to manage this type of trade to a profitable position. You had the big move lower. If you had the foresight to recognize that you're in a runaway market, you could have punched in with a profit here somewhere. But a difficult, very difficult trading day. Oops, where are you? Yes, Scott says with the Raptor, there's lots to learn. But understandable for week number 1. Yes, I forget, Scott, this is your first week. It's always the struggle between the buyers and the sellers, and you try to discern who is going to come out on top, who is going to be the stronger of the two. And right now it looks like it's the buyers again. As we get that little bit of a bullish push. By the way, even though this did not print as a number 3 signal, and I'm not sure why, it did tag or it looks as though it tagged the hard edge. I would have considered this a hard edge bounce, a number 3 signal. It would have been close enough in my books to qualify. And I don't think we're at the profit objective just yet. No, just kissed it. If we had our break-even trigger, it probably would have engaged the break-even by now. Not to sound like a conspiracy nut, but the market does try to hide its true intention. You know, the big players that are out there, they try to fool you into what direction they believe the market will ultimately take. Now, it's not that they know for certain which way the market will go, but a lot of these guys are the forces behind the marketplace, right? So they have information that we don't have access to. They can see things that we can't see. So they may try to make the market look more bullish or bearish, depending on what they want to do. I'm always suspect when I see a really quick rally up, a couple, 3, 4 bars up, and they just go boom, 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 boom. And then all of a sudden the market stalls. To me, that tells me that somebody's trying to fool traders into just hitting their buy button. Get everybody long, and then we'll see the market move the other way. Paul says, I feel like the RSI is a better indicator to watch than the Raptor filter. Sure. The thing with any indicator that you choose to add to your Raptor, and the Raptor is a robust enough system that you can certainly, it can handle another indicator. The thing is to make sure that this additional indicator helps you make a trading decision, right? You can add indicators until the cows come home. If they don't help you make a trading decision, they're not going to be very helpful. I've always liked RSI. I think RSI is a great indicator. I tend not to use the averaging line myself. One of RSI's strengths is picking up on divergence. Divergence simply means that price is going one direction, but the indicator is going the other. So here we have price going up, and here we have the indicator kind of heading down. Why is that important? Well, chances are prices will come in line with the indicator. So if that holds true, we could see a little bit of a decline here. Another way to use RSI that I've always liked are these little peaks and valleys that you get. They're just like the peaks and valleys on a price chart, so you can throw trend lines across them. And you can see here we had a break, a bullish break of the trend line, and there's our number 2 signal, the one that we ended up taking. So in this case, the indicator actually turned a little bit bullish just prior to the signal printing. Here's another one where we're getting that same kind of thing happening. We got the downtrend, we get the bullish break, and we end up printing a number 1 signal. Now, again, indicators are helpful. They're not the be-all, end-all. Perhaps, ultimately the best indicator is still price. But yes, if it helps you make a trading decision, then by all means, use it. Yeah, Paul says he uses it to watch for divergence, and you can see we're getting a little bit of a bearish move now, and again, it's because the indicator is kind of leaning to the short side. Another good one for that is MACD. Where'd you go, MACD? They always put all these dark colors on them. I suppose a lot of people are printing white charts. Well, actually, in this case, the divergence is easier to spot on the RSI. Typically, the MACD, what you're looking at is you're looking at the the humps, right? So the humps, you want them to coincide. There is divergence here, but it sometimes gets a little confusing when it flips on the other side of the zero line. And here too, you can use it to confirm your direction, or your signal, I mean. Okay, so now we got a little bit of a bearish push, and might be working a trend change signal to the short side. There's the first micro-macro cross lower now. And is it a viable signal? Yes, absolutely. Where do your stops go? Well, at the very least, your stop should go here. The better stop is up there. Here, we'll sim this. There we go. Oh, and they slipped me a tick, stinkers. Almost thought I was going to get some positive slippage out of that, but no. See, if you have a big enough stop, you can almost profit on nearly every trade. The idea is not to get stopped out prematurely while controlling your risk. And, you know, it can be a bit of a balancing act, I won't lie to you. Come on. We got a real tug of war going on right now. We did break support here, so I'm thinking maybe one more move lower. Come on, get down there. Buyers trying to buy the market up a little bit. I bet you we're sitting about halfway of this morning's range. Yeah, look at that. So all the fib traders out there are getting excited because they're saying, "Oh, look, we got 62% retracement." If you consider the daily range, though, we're right in the middle of it, right at the halfway point. Always, always, always difficult trading in the middle of the daily range because the market, it's balanced. Right up here, prices were bullish. Down here, prices were bearish. Right now, we're neutral. Not much going on right now. If the sellers are going to show up, they're going to have to do it soon, though. I'm getting a bit of a macro pullback. The Raptor completing the cloud crossover. We'll see if we come out of here and produce a sell signal. That could be a promising sell signal. Paul says he also uses trend channels to show him the extreme of a trend. And I like that. I like using price channels. I like using anything associated with price, actually, because I think it's pretty easy to follow. So if you deemed this to be a channel, a price channel, you can see how the market starts coming up short. Right? It starts to suggest, maybe we're losing some downside momentum or upside momentum, pardon me. Yeah, good tip, Paul. Oh, way to go, Mark. Mark says another 155 on a divergence at 60.53 quarters. I'm done for the week. $2,275 total profit on the week. Nicely done, Mark. Very well done. That's a good week. Especially as dull as the market's been this week, man, for you to pull $2,000 out. Nicely done. Mark says markets have been very good to me the last month or so. Yes, as Scott says, great job. Prasant is asking, how many contracts do you trade? I think, Mark, you said you trade 3 or 4 contracts. Correct me if I'm wrong. But you know, even if you, I've mentioned this before, of course, that trading is a game of multiples, right? It's not a game of doing more. Rather, it's finding those opportunities and then capitalizing on them correctly. That means both in containing your risk and in maximizing your profitability. It's actually the opposite sides of the same coin. Yeah, Mark says 3 to 5 contracts depending on the trade. And Mark maxes out his trading at 3 trades per day. So, you know, once again, you got to get away from that production line mentality where you think you're going to make more money by trading more. No. So even, let's say, we divide Mark's earnings, we average them out, and say he took 3 contracts per, that's $700 on the week trading single contracts. There's nothing wrong with that. If you can do it on singles, If you can make $500, $600, $700 on the week trading single contracts, you will make $1,000 or $1,400 trading 2 contracts, $2,000 or $2,800 trading 3 contracts, and so on it goes. And it doesn't take that long. I know, especially in our society, we're all so impatient. But let's say you're able to make $100 a day trading. Over the course of the week, that's going to be $500. Over the course of the year, that's $20,000 on average. So even if you're trading a small account now, let's say you're starting with $10,000, in a year from now, if you're careful, you don't overtrade, you don't chase a lot of trades around, you make your $100 a day, in a year's time you can be trading a $30,000 account. Well, now all of a sudden you can afford sometimes to trade 2 contracts instead of just trading 1. If you continue to do as you have been doing, in the next year, instead of earning $20,000, you could potentially earn $40,000 or maybe even $50,000. Well, now all of a sudden your $30,000 account is an $80,000 account, or maybe even a $100,000 account, and that's the way it goes. Once you get up there, once you're trading something over a $50,000 account, then it's just the game of multiples. And that is the true secret to trading, and that is the secret that eludes so many people. If you wrap your head around that one, you will do well. Prashanth is asking, what did I mean by the divergence in my previous comment? Mark has a custom divergence indicator that he has coupled with his hawk, and he just uses it to confirm his signal. So I'm just going to throw, again, how about we put RSI on here? It's not going to be the same, I'm sure, but the same but different. And I'm just winging this. I don't know whether RSI will show anything or not. So yeah, there's not really much there. Maybe if I sped it up a little bit. Yeah, it's still not really showing anything in the way of divergence. But regardless, believe me when I say it is not in the indicator that you're going to make your money. It's having the confidence in your tools. Remember, Mark only follows 2 signals or 3 signals. The first micro-macro cross on the hawk. He doesn't do macro pullbacks. He doesn't do 4 arrow consolidations, even though you can see that here in this little cluster we had a first micro-macro cross, we had a macro pullback, and we had a 4 arrow consolidation all overlapping on each other. Mark just likes doing the first micro-macro cross. He's okay with letting these other signals go by. He's only looking for 3 trades a day. And actually, I'm so glad that, Mark, you are having success with this, because like I said, I get up on my soapbox and I preach to people about this, and they don't believe me. So it's great that somebody else is doing it just to confirm that, hey, this really does work the way Eric says it works. And that's not credit to me, folks. I'm not blowing myself up here. But it's easy. Well, not easy, but if I say it, sometimes it doesn't carry as much weight as if somebody else actually says that, hey, yeah, this does work. Here's another signal that Mark likes to follow, the first or the late filter entry on the Falcon. Why does he follow that, you say? Well, because he's done the homework. He knows that, hey, this signal will work out the vast majority of the time. That's a signal that I will take. Here's a homework assignment for you guys this weekend. And honestly, it'll take you like 15, 20 minutes to do. Take your tool. Let's say we're going to do the Raptor. And you're going to need to turn off your arrows. Okay, so we're going to go here to indicators, because otherwise it's too easy to cheat. And go down here to your Raptor and pull down to the very bottom where it says arrow location. You're going to change that to do not plot. And we're going to apply that. And now from here, just randomly grab your cursor and pull it back into the chart somewhere, anywhere, it doesn't matter. And from this point on, just advance it bar by bar. And when you get a signal, stop for a moment, think about it, and then decide whether or not you're going to trade that signal. First, identify what the signal is. In this case, it looks like it's going to be a number 2 signal. Unfortunately, you're not going to get your signal prompts, but now look at it and say, all right, if I'm trading and I'm only looking to take 3 trades a day, I'm going to trade like Mark. I want to trade like Mark. Is this going to be one of the trades that I'm going to risk money on? All right, I decide that it is. How am I going to set up this trade? Am I going to go for the high probability target? Am I going to try to take the trade back to the hard edge? Try to decide these things in advance. And then once you have made your decision, play the bar forward. And, you know, am I going to make any changes in my management here? Yes, no. Am I going to let the trade run? What am I going to do? And just continue to do this. And do it for, you know, a couple, 3 days, as much time as you have. You will be amazed what you will learn in such a short period of time. So work on those things, you know, work on getting the confidence in your signal. When you see the signal print, is it going to be a signal that I'm going to try to trade? If I am going to try to trade it, how am I going to set it up? And just see if you can find those 2 or 3 signals that you would take through the day. And see if you can't end up profitable for 2 or 3 or 4 or even 5 days. If you can devote a half an hour to doing this, it really won't take you any longer than that. And you will learn so much. Okay, just a couple of comments here, and we'll close up shop here. Steve says, I was a nice short 752, but I missed it. I was eating my McDonald's. Yeah, it's oh yeah, see, there's the number 1 signal that we were waiting on. It didn't print. But it is a number 1 cloud crossover. Probably didn't print because the clouds were not fully crossed. You may not be able to make it out, but the slower cloud is still above there. Even though it did not meet the requirements as per the Raptor programming, visually you should still be able to see that's a McDonald or number 1 cross. Prasanth says, very true, Eric. I agree. It's not the tools or indicators. It's the confidence and discipline in using them. And like I said, that is a hurdle that a lot of traders never get over. And they end up going down that rabbit hole, chasing one indicator after the next, thinking that if they can just find that one indicator that they eliminate all their losing trades, they'll make money. Well, first off, that's impossible. No indicator will ever eliminate all your losing trades. And secondly, that's not the point. The point is not perfecting your indicator, is it? The point is to make money. The point is recognizing a high probability setup when you have it, controlling your risk and trying to maximize your profit. That's the whole point of what we're doing here, or trying to do here. Mark says, my divergence indicator uses Bollinger Bands and MACD in combination. Hybrid indicator designed for another vendor's system. After a lot of screen time and tweaks, I just happened to find that it works well with the DTS system. I've also used the Indicator Warehouse Profit Finder to look at the high probability trades I eventually decided to take. The Profit Finder, a great back testing tool. And like Mark says, it helps you gain some confidence in not only the signal generation, but also in where should I place my stops? What should I do for profit targets? Should I run break-even triggers, and so on? Oh, good. Scott says he printed a #1 signal here on his Raptor. That's good. My cloud, not quite crossed over yet. But regardless, you should try to get to the point where you recognize the signal independent of the prompt. The prompt is there to help you in case you miss something, but if you can anticipate it, if you can anticipate the clouds crossing, the pullback, the market pushing the price back out, and a signal generating there, you're going to be that much further down the road. All right, folks. We'll talk to you on Tuesday. Remember, no trading room this Monday. Columbus Day in the U.S., Thanksgiving here in Canada. The markets can be a little sketchy on Columbus Day, so don't get too crazy. But I will see you on Tuesday. Have yourselves a nice weekend. Talk to you soon.